What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 23rd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about a critical price level we would need to see Bitcoin close above for this month here in June in order to confirm a potentially more optimistic or bullish trend in price. And if Bitcoin cannot close this level, it is likely going to leave the question open for a longer period of time as to whether or not we've really got the steam to kick off a new bull market. We got a lot of things to dive into in today's video. If you guys happen to enjoy it, consider dropping a like. It's one of the greatest ways you guys can support the channel. And let's go ahead and kick off the rambling. All right. Now, I know a lot of people right now, whether people are already positioned in the market and feeling quite comfortable in their positions, or for those who are sitting on the sidelines, who are in cash like us at the moment, are feeling maybe a bit of FOMO, a little bit of excitement around what's going on with BlackRock and the whole slew of different financial entities that have gone out to file Bitcoin ETF applications. As we discussed over the past few videos, this is the new narrative that everyone is getting really excited about. We've had at least 2 or 3 narratives this year that people have kind of leaned into as to their belief as to why Bitcoin has to go up here. And this is definitely one of the more convincing ones, hence why we came back up here towards these relative highs back from April 2023 so soon, in just a matter of a couple of trading days. And while these are relatively moderate moves compared to Bitcoin's history, as Bitcoin becomes a more maturing asset, seeing these kind of moves of 5% on a given day followed by another 3 or 5% move are definitely noteworthy. And as someone who has generally been betting on prices going down long term and still believes that we have lower prices to go, I can't ignore this. It's definitely interesting to see here, to see that over the past couple of months during stagnation in price, where we were continuously setting in lower highs and lower lows, that we cleared through here, we have a daily blue flip, and we can see here that we're back up in the important range of prior support in the past that is now likely acting as some form of resistance. Now, as you all likely know, we have not opened up a short position on Bitcoin. I know some people would like to think that, but no, we're not shorting Bitcoin. We've still remained in cash, as our indicator didn't give us the key sign here. And thank God it happened here in alignment here with the events of BlackRock, because essentially that helped us to protect. And this is why, again, we don't want to try to chase early stage shorts. We want to make sure there's conviction here and a likelihood through our indicator that there's going to be a signal to the downside before we really make that move. So we're sitting pretty comfortably here. But at the same time as Bitcoin's price has moved up, I'm definitely sitting here wondering whether or not we've got the steam to continue moving forward. Well, just back over the past few days, I noticed here as we came up here towards this $30,000 range that on the monthly time frame, we have now seen a blue flip on our indicator. Finally, after multiple months of green here for Bitcoin and some months as well of contesting to the side, we finally have gotten towards the price figure where our indicator has flipped blue. However, it is important, and this is again bringing back here to the discussion point I mentioned earlier, we need to see Bitcoin be able to close above this level by the end of this month to get, according to our indicator, a confirmation of a trend flip. Now, it is important to note a couple things before we dive into that price level that, again, relying on one sole indicator to go long or to go short is probably not the best thing to do. Right? We say that as well to our Dash Report members here. When the indicator flips, we have a whole range of other reasons why we would generally go short, but being neutral here, this is one of our time-tested indicators that we like. It's not some back-tested built indicator just to look good on paper for crypto. This is something that's been around for decades now in financial markets, utilized in Forex markets, commodities, as well as US stocks. So this is something that is not just adapted to crypto. It has a lot of weight and is something that for me, especially on these longer term time frames, is getting me to consider that, if we do close above here in the monthly time frame, above the price level we need, then this could really start to signal potentially a continued expanded relief rally or a new bull market, which would go against the thesis we've been holding for some time. And I'm happy to admit if we get it wrong. So that being realized here, what's the price level we need to see here? Well, generally speaking, I wanted to let you guys know that if you do sign up for the Dash Report, I don't mean to plug it too much, but if you sign up for the Dash Report, you guys will get access towards a custom version of our momentum indicator that we don't feature here on the channel that will showcase a pivot point where price needs to get above on the next candle in order to confirm a trend shift. So this is something that can allow you to spot those potential long and short opportunities over a much longer time frame. So if you guys are interested to get access to that indicator, I'll leave a link down below in the description where you guys can get access to it. However, it's important to note here that the level we're looking for is relatively close to where we are now, which is roughly around $30,000 or $30,200 according to the last time I checked. Essentially, each month as we go into the next preceding 30 days, roughly 30 days from the next month, we can generally see what that price target needs to be in order to sustain the trend or convert it to the other side. Essentially, we have now gotten to a price target here. We have not gotten a close on this month. That's an important thing to note here. This is not a confirmed blue flip. We wait for a close on the month. It's the same reason why, even though we got a red flip on the weekly time frame back last week, we essentially didn't take the short position because it didn't close. We didn't get a full confirmation of a trend flip. And that is the important thing here to note here, guys. As we go into the close here in June, we've got to see whether or not here on the short-term time frame, whether it be on the weekly or daily, if we can really hold in this range here, because last time we came up here, it was met with distribution. It was met with sell-side pressure that knocked us back down. And this is, again, a very important thing to keep in mind here, guys, because I understand a lot of people might be feeling frustration if they've been in cash and they're thinking, man, I wish I really got in this rally. It really feels like a new bull market. And there are those who have been bullish for some time and feel that it's absolutely guaranteed. We're seeing BlackRock come in. Again, just back a couple weeks ago when things were slow, no one talked about it. But now everyone's really amped up, excited, and feels that this narrative is the one that's really going to carry it through. Yet, we tend to forget history here. So many people will ignore the unfortunate reality that there have been time and time again narratives that sounded strong on paper and didn't hold weight. And more importantly, a lot of people forget the macro weights that are going on right now in the global economy and continue to focus in so much on the microsphere of crypto and try to think about the idea that, generally speaking, all those things, they don't really have a weight on crypto. Crypto is its own thing. And besides, BlackRock and all these companies are just guaranteed to get ETF approval for the spot Bitcoin ETF. And that's just going to surge demand for crypto long term, leading prices to rally higher. Really? I wouldn't be so certain of that just yet. Because not only, as with many other narratives, can it fall through and have little weight at the end of the day towards becoming a reality and having any positive impact on Bitcoin out of short-term hype, but outside of that as well, price action does not lie here. We have not been able to get back above this range of prior support in the past. There was solid support for over a year and a half here from January 2021 to June of 2022. Until we clear through that range, we've got some issues here. We've got an imbalance at this range. It is essentially what's known as a supply zone, right? There is not demand in the market that's leading, but supply. Essentially, people are looking to offload at a higher price. This is otherwise known as resistance in more simple terms. And if we consider why Bitcoin is not able to get above this level since back in March, there's a pretty telling sign as to why that is. And it's not because, we haven't gotten a spot Bitcoin ETF or, the Bitcoin bank run didn't pull through. No, the reason is because on the macro sphere, which so many people unfortunately don't focus on, is signaling to us that right now we are in a contractionary period and we are preparing in the next couple of months, likely, according to history, for a recession. This chart right here is one that many people talk about maybe once a year. Maybe they hear it in the headlines, but they don't come back to it religiously. But a true macro investor will come back to this chart because they know it is one of the most important charts you can look at if you are a long-term investor. And this is the yield curve inversion. More specifically, it is the version that takes the 10-year yield on US Treasuries and subtracts the yield from that of the 2-year yield. Now, the reason we do this here is because it's comparing, in this case, the spread between long-term and short-term rates. And the reason we subtract the 2-year yield is because it shows a discrepancy. It showcases that the 2-year yield is essentially paying a higher yield than that of the 10-year yield. And for those of you who know about bond markets, this is a sort of anomaly or a small short window event that happens time and time again that showcases something is wrong and that the economy is essentially preparing for recession. Now, as we've talked about in this channel, guys, as much as we've been generally on the bearish thesis for the long term, recessions don't have to happen immediately. In fact, the yield curve inversions happens well in advance of a recession. Many cases over a year out. For example, The peak of the yield curve inversion happened in January of 2000 or here in January 1989, and at a higher level here, more suspended level, in January 2007. As many of you know, a lot of the real pain came later on in 2008. So we're not here again to say that there can't be short-term relief rallies, and certainly that there can't be narratives like AI or BlackRock submitting an ETF application and the potential that that could wield. Sure, markets can stay irrational for quite some period of time, no doubt about that. And if you want to trade those rallies and those short-term moves and you can catch them early on, that's great. But for me personally, I'm a swing trader over longer periods of time. And rather than looking on the daily time frame, I care about the weekly, the monthly. I care about getting that signal for a long-term shift. And if I don't know if liquidity is on my side, then I'm not too confident walking into it. And I'm especially not confident getting bullish when I know that liquidity is contracting against me. Let me go ahead and explain this. While a lot of people, again, have been focusing on the price action as of recent, a lot of people have been ignoring these charts like the yield curve inversion, which have gone down towards their lowest point in history. We are back on the lows here from back in March, if we take it back to the monthly time frame. We have completely reverted any potential upside here, which means that this inversion is growing bigger and bigger here. And think of it like a spring. The further this goes down into negative territory, the more violent the spring back up is going to be, and the damage that is going to come with this yield curve inversion. It has never been a good sign historically. There has never been a time where the yield curve has inverted into negative territory and it doesn't come back and revert to the mean, causing immense amounts of damage and therefore recession or depression in the process. I'm not trying to be negative, guys. I understand it's not fun to talk about these things. I'm not wishing bad on anyone. That's just what the chart says at the end of the day. And has a much longer standing history than any short-term narratives tied towards crypto or AI or anything that might get markets sprung up and excited in the short term. Not to mention, we've also got the US Central Bank balance sheet. I know a lot of people talked about the new wave of QE. That wave of stimulus that the Fed provided towards the banking system, well, at the end of the day, the Fed has not stopped quantitative tightening. And that has basically brought us back to the same position on the balance sheet in the United States where we were back in March of 2023. So I know it's easy to lose track of these charts, guys, and I understand it's very difficult. It is so difficult sometimes to just watch when certain trends are taking off and think, man, should have caught that trade. But I want to bring you back to center here and try to really, again, kind of dispel the FOMO. If you were an absolute market genius, you had all the insights, you knew exactly when to buy, when to sell, exactly the moment the bottom would be set in, right? In that case, if you had the magic wand, magic indicator that doesn't exist, let's say you had it. You picked the absolute low here from November of 2022, and you've been holding Bitcoin up to this point. A 94.2% return. Not bad. Coming up on doubling your money. And that is definitely a great return at the end of the day for the time window and period of time that that rally has played out from November here towards somewhere in June. So roughly coming up here, I think from that point it was late November. Yeah, it's about 8 months. You would have doubled your money almost from picking the absolute low. Now, I understand to an average investor in this case, that's going to sound like phenomenal returns. But I got to be honest with you guys here. You've been through a couple bull markets in crypto. 92%. That's what people are getting excited about over an 8-month period, not to mention timing the exact bottom, which doesn't happen. It's so easy to say in hindsight, oh, we could have bought here. Yeah, I'm sure everyone was sinking their teeth into Bitcoin and buying at those juicy discounts exactly on November 21st. Exactly at those lows. When FTX was collapsing, the entire crypto space was looking quite abysmal at the time, and of course regulators were going to follow suit. It's so easy to think about, man, what I could have done. I could have done that. I could have bought that. But really, guys, over a 92% move in the market? I'm not here to chase swing trades in the short term or day trades or to leverage trade and take overt risk and expose losing all the capital that I've built up over the last decade. I'll be honest with you guys here. I've done really well for myself. And I know many of you out there have done well for yourself too. A lot of that money that you have is money you worked hard for, and you invested it during a period of time where it was beneficial to invest or to take on risk because liquidity was on your side. It was almost silly not to do it. I mean, to not do it when the Fed was just buying every single dip, essentially by printing more money. We always knew that the Fed would come to the rescue, that liquidity was on an uptrend, interest rates were going down. But now we are in a contractionary environment. Interest rates and capital itself are working against us here. The yield curve inversion is just getting worse. And while that may allow a short-term window of time, a short-term window where we can be ignorant of this fact and we can party, the punch bowl can be full again, and we may see again equities continuing to rise up. It looks like we've got a clear blue flip on VTI, which again, first time we've seen this since back in February of 2022. And it's at a price level here where I think VTI, unless it has a severe correction here by the close of the month, it's going to hold. And it might continue a little bit longer considering the strength around AI, right? Market may continue a little bit higher here in the near term, guys. And yeah, we're not going to time everything perfectly here. But I got to be honest with you guys. I cannot, in good faith, put a substantial amount of capital here in this market until we start seeing some further conviction here that we've got a longer term roadmap where equities and assets as a whole, especially Bitcoin and crypto, are going to be able to accelerate much higher. I know it's painful to say that. I know it's difficult. But to be honest with you guys, if we can't clear through this range here and we can't continue accelerating higher, why feel the FOMO? Why feel the need to go in on hopes of a Bitcoin ETF? You see where I'm coming from here? I want to try to be as kind of neutral as possible, guys. Again, at any moment, a trader who has the liquidity available and stuff can go and buy and sell and do whatever. I don't have any vehement angst against crypto as an industry. I've been covering it here for coming up on 6 years here in about a month. But where there is smoke, there's likely fire. And when I look at the Fed's data, when I look at the monetary data, I can't feel really confident stepping into this. Maybe that's the hill I'll die on here. Maybe you guys agree or disagree. But you come here for my honest opinion. I'm going to give it to you guys. Day in and day out. So, 2 things I want to ask you guys about here. Actually, 3 things. One of them, if you guys enjoyed the video, consider dropping a like. It is one of the greatest ways you can support the channel. And if you want to support the channel even more and the kind of content we put out here, trying to give an alternative point of view versus the broader narrative that everyone usually chases, then definitely consider checking out the Dash Report. It's our newsletter, link down below in the description. You can get 20% off on an annualized basis. But putting all that aside, I want you guys to walk away here. It's a beautiful day. I've got the windows open. You might hear the trees blowing in the background. I want you guys to take some time away from the charts. Take some time to breathe. Think about the future. Think more importantly here about preserving capital versus chasing every opportunity. It's okay to miss a trade or two. It's not about the trades that you miss. It's about the trades that you act on that unfortunately don't work out, that can be abysmal to your portfolio. A 50% decline in your portfolio requires you make a 100% return to get back to break even. A lot of people don't understand these base concepts here that can really lead you losing everything. And I've heard so many stories from people, whether they be members of the Dash Report or just long-term viewers here on the channel, who have been ruined by leverage trading, chasing short-term narratives and hype. And unfortunately, the people who push those narratives don't really face any consequences around it. And sure, it's okay to get things wrong sometimes, right? Or to miss opportunities. But to constantly say that something is going to guarantee Bitcoin going towards $100,000, $200,000, $1 million in a non-optimistic environment, a non-optimistic macro environment where you don't have the liquidity and the Fed to kind of back up that incentive for price to go higher, It just doesn't sit well with me personally, guys. But everyone has their own opinion. There's plenty of great people out there who may disagree with me, and I respect those opinions. So I want to make that very clear. Personally, for me, that just doesn't seem to be where I can really stand in giving you guys my thoughts on the market. So I hope I make that clear and stuff. I like to have these kind of sit-down conversations where I can chat with you guys. But for me personally, there just isn't the circumstances to get too excited about price here. Let's see if we can clear through that 30, 32K range. And if we do get through there, and if we get that monthly close above that range, maybe there is some weight here, and we may need to adapt our strategy. I'll keep you guys posted on that here. I don't want to paywall everything with the newsletter. I do a lot of content here in this channel because I want you guys to be as informed as possible on the market, get my thoughts on things so you guys can add them towards your own due diligence as you're hearing things from a whole range of different people. And I know above all, guys, that as so long as you keep steady headed, you're going to be able to make it through and capture those great opportunities. If we are in a new bull market, there's much more upside to come versus a mere 94% move in price. So, have a wonderful day, everyone. Thank you all so much for watching. Have a wonderful weekend wherever you are. Stay safe, trade smart, and I'll see you all in the next video on Monday. Take care, everyone.